the Eurostat data has revealed that Eurozone households increased their savings further in the second quarter, confounding expectations that historically high rate would reverse and unleash private consumption to support growth when exports struggle. The household savings rate rose to 15.4% in the second quarter from 15.2% 3 months earlier, and stands well above the 12% to 13% range recorded in the pre-pandemic years. At the same time, the household investment rate in the euro area remained stable at 9% in the second quarter of 2025, as gross fixed capital formation increased at the same rate as gross disposable income by 1%. Mortgage lender Halifax has stated that UK house prices rose just 1.3% in the year to September, the slowest pace since April 2024, as economic and tax uncertainty weighed on demand. Prices fell 0.3% from August, against forecasts of a monthly rise. Halifax expects modest growth ahead, but analysts warn potential tax hikes could further impact the market. Northern Ireland led regional growth to 6.5%, while London rose 0.6%. In Asia, the World Bank has lifted its 2025 growth projection for China to 4.8% and raised its forecast for much of the region, but warned of slowing momentum next year, citing low consumer and business confidence and weak new export orders. Publishing its biannual economic outlook for East Asia and the Pacific region, the bank now expected China to grow 4.2% next year, after forecasting in April growth of 4% both this year and the next. The World Bank also noted that growth in South Asia is expected to slow sharply to 5.8% in 2026 from its projection of 6.6% for 2025. Its forecast for the region comprises India, Bangladesh, Sri Lanka, Nepal, Bhutan, and the Maldives. The Reserve Bank of India has proposed changes to the way banks assign risk weightage to loans and the so-called expected credit loss framework, in a move aimed at aligning domestic regulations with global norms. The RBI also proposed including transactors or credit card users who repay dues on time in the regulatory retail category. It noted that segments such as MSMEs, real estate, and credit card exposures will particularly benefit from these changes. The RBI also proposed changes to the ECL framework, which would require banks to set aside more funds for potential bad loans. On to North America. Statistics Canada has reported that merchandise trade deficit widened in August to 6.32 billion Canadian dollars as exports fell faster in both value and volume than the rise in imports on a monthly basis. Data showed that total exports dropped by 3%, while imports went up 0.9%. It also noted that exports to the U.S. were at 44.18 billion Canadian dollars, down 3.4% from July. However, its imports from the rest of the world, barring the U.S., rose 4.2%, reaching a record in August, pushing Canada's trade deficit with countries other than the United States to a record high of 12.8 billion Canadian dollars in August from 11.2 billion in July. In Africa, Finance Minister John Mbadi has announced that Kenya completed converting 3 railway construction dollar-denominated loans from China into yuan in order to save on interest payments. He added that the currency swap lowers the loan's floating interest rates from US dollar levels to more favorable yuan-based rates, a move expected to save the country around $215 million annually. According to figures from the Finance Ministry, the total outstanding balance on these loans stood at $3.5 billion as of June last year. Nigeria's Minister of Culture, Hannatu Musa Musawa, has called for increased investment in women's education and leadership, saying it is key to strengthening communities. Musawa noted that while African governments are making efforts to promote women in leadership, cultural and traditional barriers remain a challenge. She emphasized the role of education in advancing women's rights and said female leaders serve as important role models. Musawa also expressed interest in learning from China's approach to women's empowerment, highlighting opportunities for collaboration.